What's going on, traders? Welcome back to the channel. I hope you guys are well. So amazing day in the markets, right? This week has been pretty good. We've been recovering a lot of territory from the lows. So the SPY, the Qs, the SMH, IWM, and the Dow all closing in the green. All right. So the question now is, was January the 24th our low? So in this video, we're going to discuss just that. We're going to discuss a couple of wave counts that suggest that perhaps this was the low, but we're also going to take a look at other charts that may indicate that perhaps we are still in a correction, okay, and that this is just a bull trap and we're gonna gear up for new lows. So before we dive into the analysis, consider subscribing to the channel, give this video a thumbs up, and don't forget to hit that bell icon so you'll be notified when I upload the videos. As an alternative, if you guys want everyday Elliott wave analysis and updates to any of your charts, consider subscribing to Trending Waves. The link to the Discord group is pinned down in the comments section. So love to see new faces. Can't wait to have you over on our room. So in this SPY, in the chart here, this was always our preferred count, okay? And this count suggested that out of the third wave in the primary degree, November 22nd high, we have an A, a B, and a C wave, right? And we've already completed our first three waves down, okay? So 1, 2, 3, all right? ABC pull back into the wave 4, and now we're looking for the final fifth wave down. This count is still valid just as long as we remain south of the wave 1 territory, which is at 456.26. Now, post-market right now, we are 454.50. Okay, I'm looking at this here. Show you guys for a minute. 454.50. Okay, and until we break north of that level, of this level, then this count is invalidated. So for now, we're going to still hold this as our alternate count at the moment because, you know, it is likely that we're going to break this high. All right, it is likely, sorry, not this high, it is likely that we're going to break this low here. So if that's the case, then let's switch focus to our what would be our primary count now, and that is suggesting that perhaps still out of our November the 22nd high, this, instead of being an A, B, C, this is now a complex correction. So it's made up of 3, 3, and 3 waves down. Okay, very much so valid. Because if you guys remember on Wednesday, okay, this chart that led the recovery, I'm calling it recovery, right, quote unquote. I'm doing air quotations right now. Now you guys don't see me, but I'm doing the quotations at the moment because Apple, after reported its earnings, I released a video stating that perhaps Apple was the one that saved the market because it immediately gapped up. The following day, it kept on ripping and validating its wave structure, okay, to the downside, the ABC correction. So now we focus our attention to the complex correction, and Apple kept on breaking those levels. So with that being said, that's one chart that led our thoughts to believe that perhaps the downside was finally over. So keeping that in mind, we are now labeling this WXYZ, sorry, this WX and Y on the SPY, okay, which means that we have hit our targets anyway, right, in the primary degree. Okay, we've hit the 23.6 and we're hovering just above the 38.2% retracement. For those of you that don't know, these two fib levels correspond to the primary degree, so they're color coded. Okay, so this is a retracement. If I go to the daily time frame, this is a retracement from the wave 2 to the wave 3, and you get this retracement 23.38, which is an appropriate fib level retracement for a pullback in the wave 4 correction. So since those targets were met, even though the the Y wave was a bit extended, right, just beyond the 200% extension of W versus X, and just shy of the 2618, which is it's pretty extended, guys. Okay, that does not invalidate anything. All right, that still gives us the conviction that perhaps this was just a deeper correction than we potentially liked it. Another indicator, another key element that we were looking for was divergence. So on the 1 hour time frame, we set a low here on January 24th, which is when I was telling you guys, once we see a pullback into the wave 4, if this was the wave 5, we wanted the wave 5 to break this low, but we wanted RSI to remain higher, and we got just that. All right, we made a higher low, but we didn't break new lows in the SPY or in price action, and we kept on rolling higher. So if I go down to the 15-minute time frame, let's review quickly what this wave count looks like. Now, this could either be the wave 1. Okay, let me label it. All right, this is a wave 1. in that we have an ending diagonal, which is valid on the wave 1. Okay, this will be an overlap in price action, right? 1, 2, 3, 4, and 5, pretty much valid. Then we have our wave 2 and ABC, and now we have our 1, 2, 3, 4, and 5 to complete our our minor degree wave 1. Okay, so now here is the game plan coming into next week. All right, we may see a pullback slightly for wherever this low is going to be. So if that's the third wave, wave 4 should theoretically remain north of wave 1. That's 443.99. Let's call it 444. All right, if wave 4 remains north of 444, okay, then this is again 1, 2, 3, 4, and 5 of the third. So this is 1, 2, 3, okay, 4, and 5. Once we complete our final fifth, okay, let me just label this here: 1, 2, 3, 4, and 5. 2, 2, 2, and the minute degree. Yeah, that's the minute to complete the primary. This is the minute degree to complete the minor degree. There you go. This would technically now be wave 1, 2, 3, 4, 5. Let's upgrade that. So 1, 2, 3, 4, 5 for 1. Now here, ladies and gentlemen, is where I want to see a pullback, ABC, down to the wave 2. All right, and it's here when we should take clear advantage for a pretty impulsive wave structure out of the wave 3. Okay, guys, so that's the game plan. Let this play out. A lot of people are going to get FOMO. They're going to get discouraged. We're going to get the wave 4 pullback, and it's, again, the markets are crashing. Okay, that's what we're going to hear. And then we get the final fifth. I'm not sure where this final fifth or where this 4 is going to be until we complete this third. So this could either be somewhere here or somewhere north. Who knows? We just got to wait a little bit. All right. And then we get this wave 2 pullback, ABC. Again, markets are sideways, markets are choppy. We're going to hit new lows and whatever. And once we see appropriate fib zones in the wave 3, not a directional decline that's going to break this low over the wave 1. We want to see 3-wave pullback to, let's say, the 38.2 to the 50, pushing at the 50, between the 23 and the 38.2. Let me label this here for you guys. Just theoretical, right? Theoretical. Don't take this as a means to get long right now. So anywhere in this zone, right? Should the wave 1 complete somewhere here or here, whatever the case may be, this wave 3 pullback is going to give us some indication that this might be the stop on the train to get on board to the promised land, guys. So be patient. The time is coming. All right, the time is coming for us to really knock it out of the ballpark for the markets right now. So let's take a quick look at the Qs. The Qs here on this chart, still suggesting the same thing, right? So instead of this being the ABC, this is now the WXY. We're looking for the wave 1 or wave 2 pullback, 3, 4, and 5 to complete the minor degree wave 5 of the intermediate degree wave 1. So which means that if we look at this in the higher degree time frame, okay, this is suggesting that we are looking for new price action to hit all-time highs relatively soon. Wherever this finishes, we have yet to determine it, right? Until we see a clear wave 1, wave 2 pullback, then we can start being a little bit more confident that this was in fact the wave 4 low, and we'll take our fib projections to see where wave 5 would potentially land. All right. Now, a chart that is a bit of a frustration for me is the futures chart in the NASDAQ. Okay. So this pretty much is still giving me some indication that this is still a correction. Okay, we're about to hit invalidation, but this move here is pretty choppy, right? We don't see, so we got to clear wave 1, wave 2, wave 3, all right, ABC to the 4, and then 5. So we have to wait to see where this is going to go, all right, just like in the Qs, because this is pretty much giving us some sort of pullback. I don't know. Again, this is not impulsive. Maybe this was already the wave 4 and we got a truncated fifth. Okay, that may be the case. That could be a possibility. All right, or this was a wave 4 and a very weird ending diagonal. Right, 1, 2, 3, 4, and 5 in the wave 5. All right, which is why wave 5s are a bit tricky sometimes to trade. They're not as juicy and a lot of not a lot of meat in the bone as the wave 3 will do, even though wave 5s are impulsive. All right, so this could be the wave 1, 2, 3, 4, and 5, wave 1 down in 2 and 3. So we break this level here. We have yet to determine what the game plan is going to be if we're going to continue on higher. All right, guys, so back to our indices. Let's go to the SMH. SMH is leading the pack also with this one chart that's giving me high conviction that perhaps the wave 4 completed. We have, if we go to the 1 hour time frame, let me see if it's on this chart. What I was actually looking for. So 1, 2, 3, 4, and 5. Yeah. So let me just delete this because it's getting a little crowded. So this was exactly what I was letting you guys know in my previous videos, guys. So we got the 1, the 2, the 3, the 4, and once we got the 4, right, we hit a high here. This is exactly what this is a technical textbook 101 Elliott wave 5 situation, if you will, right? So wave 3 makes a new low, wave 3 makes a new low on RSI, wave 4 pull back into resistance, RSI makes a higher low here, and then price action breaks the low of wave 3 while RSI makes a higher low, guys. So textbook indication of the fact that wave 4 was completed, all right, and that we are now gearing up for further upside to go in this market. IWM showing the same signs, guys. This is not, doesn't get any clearer than that. So ABC pull back into the wave 4, 1, 2, 3, 4, 5 divergence, clear divergence. If you guys don't see, right, we have this positive divergence here in the markets. All right, guys, so it's looking strong, it's looking positive. Be excited because we are almost at the time where the resumption to the uptrend is near in the wave 5, but at the same time it is the last leg up potentially, and the markets may be in for a larger cycle correction. So short term, great. Long term, be very cautious, guys. All right, guys, so take good care of yourselves. See you guys bright and early tomorrow. Peace out.